Hi, this is Mark with your analysis for the week commencing the 27th of October. My conspiracy theory that the ECB and the Fed are controlling the euro and holding it below 137 went a little askew last week. However, at least I didn't get it quite as bad as the guys who run Deutsche Bank. They've been telling their clients this year that the euro would end the year at 120. And bear in mind, if you were forward ordering currencies, this could have had a significant effect on your business. They then revised it to 125, and now they say they've got it wrong. However, one thing that the gentleman from Deutsche Bank and I both agree on is we don't feel that longing the euro in its current position is a good idea. I'm going to show you now why. EURUSD on a monthly. I was hoping for a pullback. I forgot to cancel the order on this demo account last week, but I was hoping for a pullback to 135 and we've not got it. And technically we've broken out of a triangle which could suggest, as I mentioned before, a 2,000 pip move here. And if that be the case, then 2,000 pips will take us up somewhere around 150. However, I am not going to long the euro in its current position. And it's as much a fundamental thing as a technical thing, because as I've just shown you, we've broken out clearly. Here on a weekly, we had a big move last week. We broke the recent high from back end of last year, and therefore, woohoo, we're on our way up, and yet I still won't take this pair. And say, basically, it's experience, it's fundamentally, there's still a lot of negative news coming out of the Eurozone. German production is way down on the previous years. When we were at 5%, it's now at 0.5%. So I mean, things have changed so much. The Italian situation has currently gone a little bit quiet. The French are making noises that they want the ECB to weaken the euro as well. So it's quite possible this week either the Fed meeting or one of the ECB people are going to come out with a statement that will see this return to the mean. And for me, from a trading point of view, I say I'm leaving it alone. This is the daily. We had a complete indecision candle on Friday. What I will be interested in if we get a pullback, and if we get a pullback anywhere around 13600, and again I left this in from the previous week on my demo account, 13500 was the major area. But what we do have on this daily, we've got a trend line in place, and if you fib the recent move 61.8 and the trend line do intersect, and this area being a whole number was previous support and resistance as well. So anywhere down here, pull back to 136, I will be interested for a potential long on this pair, not in its current position. Similarly, this is the euro pound, and this is even less logical than the euro dollar. The pound has been coming out with a lot of positive news of late, and the euro a lot of negative. And what's it done? It's now moved back up. Well, this is a weekly chart, and in recent weeks we had major bounces for a month off this 200 EMA down here, and then in the last 3-4 weeks I was showing you longs here and shorts at 8500, but we've now broken through 8500. So where do we go? Well, technically you're looking for a pullback to 8500 with a view to a move up. Still doesn't feel right to me. What I'd be more interested in is if this moves up to 8700. Now on here, let me reduce the size of this chart a little. It's a bit of a messy line is this, but this upper trend line goes back to 2008. And in recent months, we've had a few spikes, but this area has held. And therefore, I will be more interested if price gets back up here for a short. Because once again, we will be looking at multiple reasons. We're looking at 8700, previous major support and resistance. I explained before that the euro pound seems to respect whole numbers more than most pairs as well, and this intersection of this hugely important trend line that goes back 5 years. So I'm more interested to short here, but technically you would be correct to think in terms of a long at 8500. I'm going to watch this on the daily chart. I don't trade on a Friday, so I didn't take this, but you got the breakthrough. So this is an M2 breakout followed by a pullback with a move on. And because we've got this intersection of a trend line, and I'm sure if we fib this latest move, there'll be some kind of fib here, although maybe only 38.2. But that is a major area of previous support and resistance. And as I just explained, this pair does seem to respect whole numbers more than most. Logic tells me 8700 is a better trade, but I will watch this on a 4-hour. Dollar Swissy. This is a monthly chart of a dollar Swissy. And you can see we've had a significant move. Now this is not the candle closed yet, so technically it doesn't count. If you were trading off a monthly, you would have to wait for it to finish, but it is a major move. And the last time that price had broken this area and closed was November 2011, so we're talking 2 years ago since price broke this area. Now in recent weeks we've had lots of decent trades off bounces off the 90. Now it's broken. Technically you are looking for a potential pullback. One word of caution with this again, we have some MACD divergence here, and what I mean by that, this area here, price has clearly been in a downtrend, and yet MACD is fairly flat, and if anything MACD is going up slightly here, so it does suggest a pullback. But technically yes, I will short if we come back here, only be in the euro or the Swissy at the same time, because it's virtually the same trade. I'm not 100% confident, but technically that is the area. The pound, now this is a pound on a monthly, and the pound on a monthly, we had a major triangle break. Even more significant, we broke this 55 EMA, and this actually has been in place since 2008 as well. And notice how in previous, this is monthly charts, price slammed into it, stopped, slammed. Finally last month it broke and it closed above this area. And if we leave this trend line in place, this then is a monthly trend line. We also have an intersection here with a monthly 55 EMA. Now, note of concern, we're near a double top. In fact, you could say with recent weeks we are at a double top. But I do favour this fundamentally and technically more than the euro. And therefore, pullback 160.70 is a major area. And let's have a look at some different time frames. Same pair, I fibbed the recent move, and that's really all I can do here. And spookily, 50% fib is the same area. So multiple reasons. You have a trend line, you have the intersection of a 50% fib, and you have some previous support and resistance, and a monthly 55 EMA, and I've just shown you how significant that was. So that for me is the area. Thing to note on here again, MACD divergence. Now MACD is not exactly a leading indicator, but MACD is often spookily accurate. And I've just shown you how this works, but if you're new, I'll just show you again. What happens is you look at the area where MACD is printed. So the top of that move here is there. MACD then started to go down at the same time as price was continuing to go up. So price is going up there and down here. That's MACD divergence. And I remember showing this a few weeks ago and suggesting this was a clue that price was going to at least pull back, and it did it. And it pulled back and it stopped to the pip along this weekly 200 EMA line, and we have the similar scenario again. If you take the recent high up here and you look at this recent high, then clearly that is horizontal. So the price action is horizontal, MACD is divergent, and therefore the suggestion here is that price will pull back. If that 160.70 area I've just shown you fails and breaks, I would definitely be interested to long at 160, and I would place my stop below this 200 EMA. So you're looking at 50-60 pip risk for a potential 230, 250 pip reward and possible move further on. So 1 to 4, 1 to 5 risk reward ratio, I will definitely take that trade. Aussie dollar. I showed you this a couple of months ago. I called this to the pip. Had you stayed in this, you're nearly 900 pips up last week, 700 and odd at the moment. This was technically a solid area looking for a bounce back up after some of the illogical selling that had gone on in the past. Now the Aussie dollar at the moment, we are at a crucial point. This is the weekly chart, and on a weekly chart you can see how last week price was drying up. These are the Bollinger Bands squeezing price. So it was a big clue that around this area price was going to struggle. Combined with that, you have a weekly 55 EMA, and you also have the 200 weekly, and then below it some more EMAs as well. So this was a hugely significant area, and price now is sat at the significant area on this pair. I do believe that the Aussie dollar will continue to rise going up to Christmas, but as with all things, we could be on for a pullback first. And let's have a look at this on daily, and this is a really good pair now to study, because clues that we are on for a break. We have stochastics rolling over, we have MACD divergence. Again, Price at this point is clearly steeply going up. MACD is flat, even suggesting slightly lower. We have a 5-8 cross forming. We are sat on now 9600 and we've broken back below the 200 EMA. This area is huge on this pair. So the way to play it, you wait for a break and close below 9600 and below this trend line. So it's actually the candle close on Friday night is 95.80. So technically we've broken, but we still sat on this trend line. So I'm going to wait a bit more. But a clear break below this area followed by a pullback, I would definitely short. And the reason, again, you are looking at a stop here. Well, an aggressive stop, you simply just go above 9600, but you've got this 200 EMA, so you're looking at a 60-70 pip stop for a potential 160 pip gain, because that would be my target for this pair. 9400 has been major previous support and resistance, and you have this daily 55 EMA in place. If you only want to play and trade with the trend, then you wait for price to break, come down here, and then long. Or the other option is watch at the market open. Watch on a 4-hour and watch for a clear break back up and then a pullback with a view to a long. As I said to you earlier, this is a key area, and from a technical perspective, there's so much going on here, guys. Same pair here on a 4-hour chart, and this is just showing you when I talk about playing a break on the 4-hour chart. So here previously we had a 4-hour trend line in place. Candle came down, and it wasn't the greatest of close below, but it did close below, and it spiked down to the pip to this 200 EMA. The very next candle came back up to the pip again, touched the line, broke and moved away. Now it's messy, but eventually it has broken, and as I've just shown you, there's potential here for a big move back down to 9400, so there's a 200 pipper on the table there. Similarly, Aussie dollar yen, this is a weekly. Notice the Bollinger Bands had squeezed price again, same as Aussie dollar. And once again, we are sat on a weekly trend line intersection. And if we take this to the daily, you have had a 5-8 cross already, you've had stochastics rollover, and you've got the dear old MACD again, giving you clues that we're on for a break. Now I prefer the Aussie dollar over the Aussie dollar yen on this pair, because the reason is you need a clear break below 9300. Then the difficulty is you've got these EMAs just 92.20. So the potential reward for this trade is less than that of the Aussie dollar. And equally, where you're going to put your stop? Well, really, you're going to start thinking in terms of a stop up here, 140 pips away for 100. Nope, walk away, not for me. Final option is if it does break, where's it going to end up? Well, 90 was a major area in the past, and I would be interested to long from there. Euro yen on a weekly chart could be an indecision candle here, and if we go down to a daily, we have dear old MACD again. So MACD, stochastics rolling over, potential here that price has hit a top and is going to pull back. 132.00 was the previous area, even 132.30, because notice how this 55 has been in control of this pair for quite some time. So anywhere around here for a pullback, I will be interested to long. Final ones, we have the dollar yen. Now the dollar yen, I would tend to leave alone at the moment. This is a weekly chart, and you can see that we're inside a triangle and a potential break here of middle figure around 1,000 pips. But is it going to break up or is it going to break down? The theory was that by the end of this year, this was going to be at 120, 130, but we're still bobbling around 100, just below 100. 98.66 has been important for weeks, but it did then get messy and broke. Ways to play it, you look for a break and a close below, then a pullback for a short, or you look for a break and close above for a pullback for a long. I prefer the former. Now this is a weekly chart. Technically you're supposed to wait for the weekly candle to close and then take the trade, but I wouldn't take this on anything less than a daily chart at the moment. The problem is the Bank of Japan. The Bank of Japan have openly admitted that they will weaken their currency if they don't like the look of what's going on, and therefore in previous weeks I'm sure they were intervening around here, and they're quite capable of doing it again, and then you'll see the USD rocket. And the reason I say that is last year they clearly stated when price was down here 76, 7700, that's what they were going to do, and look what happened last time. The Bank of Japan intervened. So there's always a danger. Technically this is on for 1,000 pip fall. The Bank of Japan suddenly dive in here and off we go again. So it is messy. Technically the safest way to play it is wait for the weekly candle to close. Last but not least is the CAD, the dear old loonie, and it won again last week. And if you remember, the last 5-6 weeks I've been calling for longs from this 200 EMA. I missed this middle one because it just missed my entry by a handful, I can't remember now, and I was spitting feathers on the occasion. And I did get into this on a rebound, but again you'd have to look back to previous blog post. But we had a win, 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 just missed, win, win. We also had a win from a short at this point here. We now had a loss. Price has broken above 104.20, which has been major previous support and resistance, and yet I'm not going to take it. I would far rather price comes back down here and another one of these. But if you're working on decent risk reward ratio, which we were with this, if you recall, I was showing you could either aggressively go just below this area or more conservatively down here, but you were risking 70 odd pips for 140 pips, a 1 to 2 risk reward ratio on both ends of the trade. So that I would definitely be interested. I'm not interested in longing in its current position. If we get back up here, we'll start looking for clues to short back down again, but that is a key area for me. Once again, if you're new, we always look for as many reasons as possible. We are above the weekly 55, which is pointing upwards. We have an intersection of a weekly trend line that goes back to August 2012, and we've got all these EMAs going on here as well as previous support and resistance. So this was why this was key. Okay, have a good week. Be careful, it's FOMC. I think it's Wednesday this week, and there's a good chance that the politicians from either end of the pond may start to try to talk the euro back down again. So as I've shown you earlier, lots of MACD clues that we could be on for a reversal, and certainly we could be on for a pullback at some point this week. Have a great week.